Hello, everybody. Metastock. This is Jeff Gibby. Welcome to the class tonight. Want to thank everybody for coming out. I hope you're having an enjoyable day and enjoying a little bit of spring weather. We're getting some over here in any case. Cal, thanks for coming. Ram, thank you for coming. Bruce, yes, we're here. And we're getting ready to get started. I want to say thanks for coming in today. We're going to go ahead and go straight to the legal disclaimer and get to the point. So let's do that. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features presented with features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. Hey, we're going to pull Ryan on here today. Ryan, how are you doing tonight?
I'm doing just fine. I hope everyone's doing good as well.
Yeah, good. Good. Why don't you give us a little bit of a background for kind of who you are and why we should listen to you?
Sure. So a lot of this I'll go over in the presentation, and you'll actually probably hear me repeat some of the things just over and over because at Simplicity, we take a slightly different approach to technical trading than most people are probably used to. But if you stay with me throughout the entire presentation, I promise we'll impress.
All right. Well, I've got you. So, I'm sorry to put you on the spot like that, but I'm feeling a little bit wacky today. So I
Not a problem.
started this morning with like a really early Chinese webinar with some customers in China. And yeah, I'll use that as the excuse. So you've got the screen, you've got the controls, and the floor is yours, Ryan.
Perfect. Okay, let's get right into it. So for those of you that don't know, I'm Ryan Capaccio. I'm co-founder of Simplicity Trading Systems and managing partner of the Capaccio Trading Company. Although these two companies may sound similar, they're actually very different. Capaccio Trading is an equity trading firm where every day we put up our own capital in order to trade large, mid, and small cap stocks. However, at Simplicity, we create simple, easy to use trading strategies designed to shorten your analysis time and predict future movement. See, we know that technical analysis can take up a large portion of your time and can be very subjective, leaving a lot of people feeling confused with nowhere to turn. So, all of us at Simplicity set out to change this. And with the help of Metastock, we created the Endeavor add-on. With Endeavor, you'll now be able to stop reacting to stock movements and to start preparing for them. So, how do we do this? Well, as some of you may already know, we take a slightly different approach to trading than most. You see, we don't believe in telling you how to trade. Instead, we tell you how price is going to trade, empowering traders to make their own decisions. So you don't have to feel enslaved to TV programs or chat rooms for those opinions that are being passed along as facts. If you know how price is going to trade, then you can decide for yourself if the movement that's about to happen fits your unique trading style or overall investment profile. Here, let me show you a brief example of what it's like trying to predict how price is going to move with and without Endeavor. This is the SPY, which is the S&P 500 ETF. Now, with the naked eye, this looks like an incredibly strong upward trend, and most people were confident that it was going to continue because when you look at it, there doesn't seem to be anything wrong with it. But there's always more than meets the eye. Watch what happens when I apply Endeavor. You can see that we start getting red bars during our upward trend. So, okay, what do the red bars mean? Well, every day that a bar comes up red, we also get what we call a movement warning, telling us to proceed with caution. Price has moved up too fast and could be overextended while the bars are red. As soon as you see this, you can start preparing for a potential change in the way that price is trading. Then, a few days later, we get a red diamond on the chart. And this is where you really have to start paying close attention to price, because you could be just days away from a trend-changing event. The diamond above price is our early warning signal. These represent potential price dips and are designed to alert you to the fact that price is likely to experience a downward movement only during its upward trend. But we believe in confirming all of our signals. So price is only likely to dip if it crosses what we call a trigger point. Now, I'll go over what a trigger point is and where to find them in more detail later. Although, simply put, trigger points are custom figures generated by our algorithms that identify a specific price that must be crossed to confirm the signal. In this case, the trigger point is 280.77. So, if 280.77 is crossed, you can expect price to begin to dip down. But if the trigger point isn't crossed, then the uptrend should continue. No harm, no foul. Let's move forward in time here and see what happens. The next day, price does cross the trigger point and it begins to move down. Now, there is no way that we could have predicted just how extreme this fall in price was going to be. But on average, you can expect a 2 to 5% dip with an early warning that comes after 2 or more red bars, which is exactly what happened in this example. My point being, when everyone else was shocked by the fall in the S&P, you would have been expecting it to happen, giving you enough time to develop a plan that fits your trading style. For instance, as soon as the trigger point was crossed, we sold out of all of our short-term trades because we didn't want the risk associated with the upcoming volatility. But you could have just as easily have shorted the markets if you wanted to. That's the beauty part of this. You can make your own choices. Believe it or not, this is just one small part of what the Endeavor add-on can do. So let me take a few minutes and quickly go over how you guys can use Endeavor to predict how price is going to trade. Then I'll show you which signals and alerts will help you trade in the current market environment. And I'll give you a few stocks that currently have early warnings and are about to dip within the next few days. As we go through this, keep in mind that our goal is to make everything as easy to understand as possible. But if anyone does have any questions, you can just send them in over the chat and we'll go through everything at the end. Now, stay with me as we begin by breaking down the analysis process with our simple 3-step system. Categories, step 1. Identify the big picture movement. Color codes, step 2. Identify the correct upward movement. Smart get outs, step 3. Identify the right time to exit. Let's break these down step by step, and we'll go through them one at a time. Starting with categories, step 1. Identifying the big picture movement. And this is how it works. After you've selected your security, we categorize price as Endeavor or Discovery. The Endeavor category represents potential upward trends that could reach their all-time highs. However, the Discovery category represents potential downward trends that are likely to consolidate at lows. With these classifications, you'll be able to tell at a glance if price is more likely to have upward or downward trends. Today, we're only going to focus on the Endeavor category, potential upward trends that could reach their all-time highs. Inside Metastock, all you guys have to do is type in the ticker symbol that you're looking for. Then, when the chart comes up, simply apply the Endeavor and Discovery template, and a ribbon will appear on the bottom of the chart, identifying the category that price is in. When the ribbon turns to light gray, that represents Discovery, and when the ribbon turns to dark gray, that represents the Endeavor category. Now, just so we're all on the same page, every chart you'll see is a daily bar chart, which means every bar in the chart represents one trading day. We recommend that you use daily charts with the Endeavor add-on. Got it? Okay, let's move on. Let's break this chart down into individual categories. Although we are focused on Endeavor, it's still important to understand the basics of both categories. You can see here, when price was in Discovery, it trended down to a low and then began to consolidate, just as you would have expected it to, since that's what the Discovery category represents. potential downward trends with consolidation at lows. You've no doubt heard the phrase buy low, sell high. Well, now you'll be able to tell if a stock is so low that you should just stay away from it altogether. But just because a stock is currently in discovery doesn't mean that all hope is lost. Notice how as soon as price enters the Endeavor category, it started moving up. That's because the Endeavor category represents price having potential upward trends that could reach their all-time highs. In fact, every stock that has ever exceeded its all-time high has done so while in the Endeavor category. For those of you that have asked, how can I tell if a stock is more likely to rise or fall? This is your answer. And that's it for step one. That's all you have to remember. When price is in the discovery category, you can expect potential downward trends with consolidation at lows. When price is in the Endeavor category, you can expect potential upward trends that could reach their all-time highs. Okay, how about a recent example? This is Macy's, ticker symbol M. Now, last year, I got asked about this stock at least twice a month, every single month. There was a section on our website that we used to have where people could pit what they thought was going to happen based on their own research versus what the Endeavor program said would happen. And each time, the person had claimed to have done hours or days of research and said that price had found its bottom and was going to immediately start to rise. Well, as you can see, price actually fell almost every single month. But that was no surprise to me because it was in discovery. Price didn't really start moving up from its low until it entered Endeavor. Now, keep in mind, I didn't have to do hours of research on this stock to know that for most of 2017, Macy's was more likely to fall than rise. All I had to do was look at the ribbon on the bottom of my chart, which all in took maybe a minute and a half. However, once price entered Endeavor, now Macy's situation had changed, and I knew that price was more likely to rise. It's that simple. No matter the stock, when price is in the Endeavor category, you can expect an upward movement. The question then becomes, what kind of upward movement will occur? Which brings us to color codes step 2. Identifying the correct upward movement. And this is how it works. Inside Endeavor, colored signals represent the movement that's most likely to occur. Now you can predict future movements without having to interpret indicators. We've identified basic movements that price will make while in the Endeavor category and labeled them with colored signals, making it easy for you to recognize them. Each signal will appear as an arrow located below price action. Green signals represent long-term trends. Blue signals represent short-term trends. And black signals represent price making a full rebound back to highs. It's that simple. With our colored signals, you'll be able to predict how price is likely to move within seconds of looking at your chart, saving you valuable time since there's no indicators to interpret. Let's take a quick look at a chart so you guys can see for yourself what the signals look like. Notice how our charts are simple and clean. We show the Endeavor and Discovery ribbon on the bottom of the chart and our signals below price action. However, signals are only useful if you know the right price to enter the trade at. Otherwise, even with the signal, you're still just guessing at the right entry price. And this is where Endeavor really gets good. You no longer have to guess when the right time to enter a trade is. All of our signals come with individual trigger points shown in the commentary section. You remember the trigger point from the example in the beginning of the presentation. Well, I told you that I would explain them in more detail, so here we go. Let's start with the question that's probably on everyone's mind. What is a trigger point? Well, trigger points provide the exact price that needs to be crossed to confirm the signal. Gone are the days of jumping into a trade just because price took out the last bar's high. That one-size-fits-all approach is now a thing of the past. All of our trigger points are customized to fit the specific security that you're looking at. our algorithms take in historical pricing information based on past movements and create custom figures that we call trigger points. Here, I'll show you an example using a blue signal. As you can see, our trigger point is 1056. So if price crosses the trigger point, then we can expect a short-term upward trend. Because, if you remember, that's what the blue signal represents. The next day, price crosses 1056, so the signal is confirmed. And just as predicted, a few days later, price begins to move up. By using the colored signals in combination with the trigger points, we instantly know two things. Number one, when it's safe to enter a trade, and number two, the type of movement that price is going to make. In this case, a short-term upward trend. Now, trigger points also work the opposite way. For my second example, I want you to pay close attention to the high of the signal bar. You can see our trigger point is 2209, and it's slightly higher than the bar's high. Watch when I move forward in time. We can see that although price did take out the high of the signal bar, it did not take out the trigger point. So the signal is not confirmed, and we see price fall. But falling price doesn't matter to us because we knew not to enter the trade since the trigger point wasn't crossed. I've seen price come 1 penny away from crossing the trigger point and then turn around and tank. That's how accurate these can be. Now, some of the signals have slightly different rules when it comes to how they're confirmed. So let's quickly go through how each signal works. But first, if at any point you want more in-depth information on a specific signal, all you have to do is go to whatsimplicity.com and click on the tutorials page. There you'll find short videos and in-depth tutorials on every single color. Now, let's begin with the green signal, identifying long-term trends. This is ticker symbol AVY. It had a green signal back in February of 2017. Normally, I wouldn't go back this far to show an example, but since the green signal is predicting long-term trends, the only way to show the example is to go all the way back to when the signal occurred. Now, when the criteria is met and the signal occurs, you're also going to get an alert box that reminds you what the signal represents and to check the commentary for the trigger point. So I'll bring up the commentary. Notice how inside the commentary, everything is simple and easy to read. You're given the exact definition of green and the criteria needed to confirm the signal. Green signals are a little different than the rest. They need 3 consecutive closes above the trigger point to confirm the signal. You'll know that you're confirmed when you get the green 3 icon on the chart above the trigger point. The trigger point in this example is 8084, which I'll label on the chart here with a green line. Now, let's move forward in time and see if our signal gets confirmed. You can see it took almost a month, but you get a green 3 icon above the trigger point, followed by a green confirmed alert box, telling you that today is the 3rd consecutive close above the trigger point, which means it's now safe to enter the trade and you should expect price to start its long-term upward trend. I'll move us forward in time again. And just as predicted, price makes a monster move up, making over 31% in 1 year. Not bad for a single trade. But if you're not interested in long-term trends, next, we have the blue signal, identifying short-term trends. This is ticker symbol BOX. It had a blue signal near the end of February. Just like the last example, when a signal appears, you'll get an alert box to remind you what the signal represents and to check the commentary for the trigger point. I'll bring up the commentary. Here you find the definition of blue and the criteria to confirm the signal. Blue signals only need price to cross the trigger point to be confirmed. The trigger point in this example is 2306, which I'll label on the chart with a blue line. Now I'm going to move us forward in time. You can see that 2 days later, price crosses the trigger point. So we know it's safe to enter the trade. And price should make a short-term upward trend. I'll move us forward in time again. And in only 3 days, price moves up over 4%. In fact, it actually moves up and hits over 5% at one point, but then it closes down just above 4%. Now, I don't know about you, but this is what I call a short-term trend. However, if you're not interested in these either, then we have the black signal, which is used to identify full rebounds back to recent highs. This is ticker symbol MU. It had a black signal in the middle of February. Now remember, black signals identify when price has fallen from its recent high and has a chance to move back up to it, making a full rebound. Like always, when the signal appears, you'll get an alert box to remind you what the signal represents and to check the commentary. Inside the commentary, you'll find the definition of black, as well as the information on how high price can rise if the signal is confirmed. Black signals only need price to cross the trigger point to confirm the signal. The trigger point is 4402, which I'll label on the chart with a black line. Now, we know that if the signal is confirmed, it means that price will make a full rebound. But just how high can price go? The answer to this is in the commentary right below the trigger point. We call it a projected target range, and it tells us to mark the two highest sets of clusters created by opens and closes below the most recent high, which I've marked with two red lines. Our top range is 49.40 and our bottom is 48.41. Now, if the trigger point's crossed, we know exactly how high price can rise before it's likely to make another pullback. 2 days later, price crosses our trigger point, so this signal is confirmed, and we should see price move up and hit inside our projected target range. I'll get rid of the commentary and move us forward in time. Just as predicted, price moved straight up and hit inside the projected target range, then immediately pulled back. But if you got in when price took out the trigger point and then sold inside the range, you would have been up over 12%, which I think anyone would agree is a pretty good amount considering we were only in this trade for 8 days and you knew where price was going to move up to before you even entered the trade. And that's it for step 2. When a signal appears, you can now identify what type of upward movement price will make. It's either going to be a long-term trend, a short-term trend, or a rebound back to recent highs. So now that you know when to enter the trade, the question then becomes, where and when is the correct time to exit? Which brings us to Smart Get Out's step 3, identifying the right time to exit. And this is how it works. Smart Get Outs provide a realistic view on where price is likely to move before an exit is necessary. Their goal is to prevent traders from overreacting to the natural swings in price. Today, I'm going to focus on the smart get outs that appear as signals, early warning, and exit signal. You know a little about the early warning from the example earlier, but I'm still going to go over it so that we're all on the same page. Early warnings identify when a downward movement in price may occur during an upward trend. In other words, they'll identify price dips. You've already seen firsthand how much of a difference it can make to know beforehand that price is going to dip down. If nothing else, it gives you enough time to prepare for that movement. Then we have the exit signal, which identifies when price is breaking down, signaling the end of upward momentum. Finally, you'll know when price has finished its upward trend and is likely to make a large push down, making it almost impossible for you to get trapped in a stock as it tumbles down month after month. Early warning signals appear as diamonds, and exit signals appear as downward arrows above price on charts. Both of these signals are used when analyzing green and blue movements. Now, let's see these in action, starting with the early warning signal, predicting a dip in price. This is ticker symbol CNK. It had an early warning signal on February 28th of this year. Remember, the early warning signals are represented by red diamonds that appear above price. Like always, when a signal appears, you'll get an alert box reminding you what the signal represents and to check the commentary. Inside, you'll find the definition and the criteria to confirm the signal. Early warning signals only need price to cross the trigger point to be confirmed. The trigger point in this example is 42.33, which I'll label on the chart here with a red line. The next day, price takes out our trigger point, confirming the signal. So I'll get rid of the commentary, and you can see that in only one day, price has already moved down over 3%. But although this may be surprising to everyone else, you already knew it was likely to happen, and hopefully you adjusted your strategy accordingly. However, if you're looking for a signal that can predict a much larger movement down, well, that would be the exit signal, predicting a breakdown in price. This is McDonald's, ticker symbol MCD. It had an exit signal on January 31st of this year. And you know what comes next. An alert box will pop up to remind you what the signal represents and to check the commentary. Inside, you'll find the definition and the criteria needed to confirm this signal. Exit signals only need price to cross the trigger point to be confirmed. The trigger point is 169.69, which I'll label on the chart with another red line. The next day, even though price closes positive, you can see that it did cross the trigger point. So the signal is still confirmed. And you should expect price to start moving down. I'll move us forward in time so we can see how this turns out. Not only did price have a pretty dramatic fall, it also moved into the discovery category, which is not a good sign. In fact, as of March 1st, price fell more than 12% from its trigger point. Now, when looking at this chart, you may have noticed two things. Number one, that there was an exit signal in September of 2017. And although price does move down a little, it then rockets back up, essentially whipsawing you. I chose this example to show you that this system is not perfect and it will be wrong sometimes. But as you can see, our blue signal would have gotten you right back in this trade. The second thing you may have noticed about this chart is that there was a large gap down in price in the beginning of March. Now, although you might be thinking that this was caused by earnings, it wasn't. It was actually a downgrade by a ratings company called RBC Capital. Those of you that trade often know that downgrades can come at any time and are a killer if you're on the wrong side of them, because it's almost impossible to predict when they're going to occur. Well, until now. Here's another fun fact. A stock that has a confirmed exit signal is over 62% more likely to be downgraded. So, although not all of our exit signals will be right every single time, the safety that they provide more than makes up for the times that they may cost you money. We actually have a saying at Simplicity that some of you may have heard before. It's not always about how much you make, it's about how much you don't lose. And that's it. Those are the 3 steps. Step 1, identify the big picture movement. Step 2, identify the correct upward movement. Step 3, identify the right time to exit. When you put all 3 steps together, you have the Endeavor add-on for Metastock. Okay, now that I think you understand what Endeavor can do, let's talk about the best signals and alerts for a volatile market. The blue signal, the early warning signal, and the movement alert. Why the blue signal, you may ask? Well, as you know, the markets have been incredibly volatile lately, and it's fairly safe to assume that they're going to continue this way. So, right now, it's a good idea to pay close attention to what we refer to as time exposure to the markets, meaning you want to have your money in the market for the shortest amount of time while making the maximum amount of profit. And since blue signals identify short-term upward trends, they provide us with a tremendous opportunity. Let's look at a few recent examples, starting with the blue signal right here on JOBS. This signal occurred on March 2nd, and like always, along with the blue signal comes the blue alert box. I'll open the commentary. You can see here our trigger point is 77.88, and I've already set the line on the chart. Now I'll move us forward in time. 2 days later, price crosses the trigger point, so it's safe to enter the trade. The next day, price moves straight up, making over 5% in 2 days. Now, like I said before, I'm not here to tell anyone how to trade, but 5% in 2 days, when the markets are up one day and down the next, I would take my money and run. When using the blue signal, it's important to keep in mind that although it does predict short-term trends, we don't know how long those trends will last. So, whenever you're up a good amount of money, feel free to sell. There will always, always be another trade. And on that note, let's look at another example. This is Akamai Technologies, ticker symbol AKAM, which had a blue signal on February 15th. Let's open the commentary. We can see the trigger point here is 67.79. Once again, I've already placed a line in the chart, so I'll move us forward in time. The next day, price closes down, but it did take out the trigger point, so it's safe to jump in. I'll move us forward in time again. Here, it's been 13 trading days since price took out our trigger point. And as you can see, price really hasn't moved up much yet. But in a volatile market, you can't always expect immediate price movement. Now, I'll jump forward in time 1 day. Price rockets up $4, giving us a red bar and a movement warning, telling us to proceed with caution. Price has moved up too fast and could be overextended while the bars are red. This is how fast things can change in this kind of a market. One day you're basically flat, and the next you're up big. Now, again, just a piece of friendly advice, this would be a good time to sell. You would have been in this trade for a little longer than most of our short-term trades. But after 14 days, you would have been up over 10% or $7.29. Now here, to put this into perspective, the entire Endeavor program costs $950 a year. And if you would have taken just 150 shares, you could have paid for the entire program in one trade. Or just 14 days. Not bad. But I also don't want to give you the wrong impression. Not all blue trades are going to work out. This is ticker symbol SRDX. It had a blue signal on March 2nd. I'll open the commentary, and you can see that the trigger point is 33.47. Right away, I'm sure you've noticed here how this stock is a lot cheaper than the last one. I want you to keep in mind that the price of the stock has absolutely nothing to do with its opportunity to make a short-term upward trend. So let's move forward in time. The next day, price does take out the trigger point, but the bar turns red and you get another movement warning. Tells us that price has moved up too fast and could be overextended while the bars are red, even though we just entered the trade. So if you jumped into the trade, I would seriously consider getting out the next day, because price is telling us that although, yes, it did have the opportunity for a short-term trend, things change. After all, it's the stock market, and right now it's up one day and down the next. Let's move forward in time. And the next day, price doesn't really go anywhere. So in this example, you could have sold out at no loss. Personally, I never take the short-term trades that have red bars, because 9 out of 10 times, you're just asking for trouble. I don't even wait for the early warning signal. I just sell out. But if you've been in the trade for a while, then that's a totally different story. Like in this example, this is Lowe's, ticker symbol LOW. Now, let's say that you went long back when you got the confirmed green signal in September at around 81.35. You're in this trade for a couple of months and you're making money. But then one day you see the red bar and you get the movement warning. Okay, not the end of the world, although now you know that you have to start paying close attention to price. But You don't have to take action just yet because you're already up a good amount of money, so you have more than enough room here to wait and see if you get an early warning signal. So I'll jump forward in time. This is now 11 days later, and now price has consecutive red bars and an early warning signal. This is when you have to seriously consider evaluating if you should stay in this trade or sell out, because you know that if the trigger point is taken out, you're likely to get a 2 to 5% dip in price. So I'll open the commentary and get the trigger point 104.23, represented by the red line in the chart. I'll move forward in time. 2 days later, price crosses the trigger point, and you know it's confirmed. Now, like we said before, you could have entered this trade at 81.35. So if you sold out at 104.23, you would have made $22.08 or over 28%. I like this example because when you're making money, it's really easy to say, well, I want price to go to $110 or $120 before I sell. But what you want to happen and what's going to happen are two very different things. And it's always best to check your ego and listen to what price is telling you. Let's move forward in time and see what happens. In 14 days, it ends up falling over 8%, which is a little more than I would have expected it to, since remember, on average, if you get multiple red bars followed by an early warning signal, you can expect a 2 to 5% drop. Okay, now let's jump inside Metastock and see some live examples from today. Both of these stocks have at least 2 or more red bars, followed by an early warning signal. The first thing that you'll probably notice is that both Netflix and Akamai are technology stocks, which shouldn't really be that surprising that they have red bars considering the NASDAQ has been up a lot more than the Dow and the S&P. In fact, since all three markets fell in the beginning of February, the NASDAQ is the only market that has made new highs. So it makes sense that some technology stocks are now overextended. Let's take a look at Netflix first. I'll blow up this chart. We'll come up here. Since I already have the early warning applied, if you ever run into the situation where you can't remember what one of the signals mean, all you have to do is scroll over it, and we see here, it happened on 3/7 of 18. It's an early warning. We have the initials, EW. Sometimes it's just easier to refer to an early warning as EW instead of saying early warning. And we can see that it says it represents a price dip. We'll come up here, we'll go to View, Expert Commentary. Once the commentary window opens, we'll scroll down. We can see that our trigger point is 312.41, and that's what this red line represents. Okay, now, I'm sure that some of you heard that there was a well-known short seller on CNBC saying that Netflix was going to fall and that he was going to take a large short position. But what we know that he doesn't is that price is not going to fall unless it crosses 312.41, our trigger point. And if price never crosses the trigger point, then Netflix doesn't have to fall. It can absolutely continue its uptrend. I'll get out of the commentary. And now let's look at Akamai Technologies. Again, since the signal's already applied, I'll come up to View, Expert Commentary, and I'll move down here to our trigger point. If you don't want to always check the physical signal for what date it occurred, it always tells you right next to what you're looking at. So we know here that an early warning happened on 3/12 of 18, and that our trigger point is 74.11. Again, represented by the red line that I've already placed. Now, if this stock looks familiar, that's because it was the example that we just used of the blue that took 14 days to give us our 10% profit. And now it has 2 red bars and an early warning signal. So you could have very easily have taken this stock long, sold out in profit, And now when you get the early warning signal, again, because there was 2 red bars, you can expect a 2 to 5% dip in price. So this is a shorting opportunity if that's the route you want to take. Otherwise, it's just plain information that you know that you can expect a 2 to 5%, 2 to 5% dip. Which, if this falls, let's just say 2% from our trigger point, our 74.11, that would put price down to 72.62. You can see just by looking at the chart here, the prices already began to fall, and it's actually almost at 72.62. It came very close today. But over the next few days, you guys can watch this and see if price hits our number. And you know what? While we're here inside the commentary, I want to show you guys my favorite part of this entire system. Since there are a lot of signals, and they each have their own slight variance in rules, if you ever have any questions on any particular signal, all you have to do is open up that signal's commentary and click the link right here for quick tips on how that signal works. This brings you to the tutorial page on the Simplicity site, where all you have to do is scroll down and you'll find videos on every single category and every single color that we offer. So in this case, we're coming down here to early warnings, and you can either watch a quick 5-minute refresher video or a longer in-depth tutorial that vary, but they're anywhere from 15 to 20 minutes. Also, if you're just getting started with this and you want more information on it, you can sign up here for Endeavor's free quick picks, where every week we send out early warnings and blue signals that we think are going to make a big difference on those securities. I'll come back into Metastock. I'll get rid of our commentary. So I hope these live examples were helpful. Personally, I hate it when people show examples that are totally and completely out of date because that doesn't help anyone. So if you guys want to keep your eye on these stocks, we'll see how they work out. Now, we've come to the moment that everyone's been waiting for. Let's get down to business, right? How much is this going to cost? Surprisingly, not that much. The Endeavor add-on is offered as a subscription service through Metastock. So you can sign up for the monthly plan and pay $99 a month, or you can sign up for the yearly plan and pay $9.50 once a year, which means you're going to save 20% with the yearly plan. In fact, when you break down the yearly pricing, it's only $2.60 a day, which is less than the price of a daily cup of coffee. Plus, right now, if you try Endeavor yourself for 1 month, we're going to give you the second month for free. And if you ever have any questions at all, please don't be shy. Just shoot us an email at about@simplicitytradingsystems.com, and we'll get back to you within 1 day. Okay, that was a lot to take in. So now, if anyone has any questions, I'm going to turn it back over to Jeff, and we can go through all of them.
All right, Ryan. Hey, if does anybody have any questions? I'm going to go ahead and, as you're typing them in, if you do have questions, go ahead and feel free to let us know. We'd be happy to take them. While you're doing that, let's go ahead and kind of talk a little bit about what the offer is for the Simplicity product. Ram says, thank you very much, gentlemen. Enjoyed the class. You're welcome, Ram. Thanks for coming today. So the offer for Simplicity, basically, the Endeavor product is going to be $99 a month or $950 annually. And if you do the annual option, basically, you will get 30 minutes of free consultation with it. The offer that we're going to do for you for free with the product, we want you to be able to try it out, see if you like it. If you buy either the monthly subscription or the annual subscription, you can buy now. You'll get your first month, and you'll pay for that, but you'll get your second and third month for free. And so to take advantage of that, just go up to metastock.com/simplicitytradinga. And for those of you that don't have Metastock, it does require Metastock. Metastock's the software program that kind of powers the software. We'll also give you a 2-for-1 on that. And the subscription on that runs at about $59 per month. So aside from RAM and thanking us for the webinar, I don't see a lot of questions coming in, Ryan. Do you have any final thoughts?
No, I mean, just as long as if no one has any questions, I mean, I'll like I said, anyone can send us an email at any time if they currently use the product or if they need more information on it. What we usually like to do is because sometimes people don't want to jump out in the crowd and ask some questions. So we always say that if you email either Metastock or specifically if you email us at Simplicity, whatever your question is, we can make a short video and we'll shoot it over to you so that you can see kind of live how it works.
Edna asks a question. Hey, thanks for the question, Edna, by the way. She wants to know if how do you get this on your trading platform, and is Metastock a trading platform? So I'll give you a little bit of a spiel in terms of what Metastock is. So Metastock's a software company that's been around since 1980 something. We have been in business since the 80s. We've been actually rated best software in our price category for 24 years in a row now, maybe 23, one of those two numbers. But basically, we don't do trading for you, but what we do is we allow you to scan the market, get the expert trading advice that Ryan was showing you, and you can get this this award-winning platform for roughly about $59 per month. So if you don't have Metastock, this is a great opportunity for you to try it out. You'll just come up to metastock.com/simplicitytradinga. Okay, and what you'll do is you'll scroll down here a little bit, and you'll basically go ahead and either subscribe to either the monthly option or the yearly option right here. And then you can add the Metastock, either the daily chart subscription here or the real time. If you have Metastock, just leave these boxes unchecked and click on order now, but this will allow you to get basically Metastock for $20 a month for the next 3 months, which is incredible. Ryan, question coming in now. A couple of them, actually. Howard says, will this work on intraday or real-time charts?
It's best to use this on just the daily charts, only because, like, for instance, the long-term signal, well, long-term, I guess, could be considered relative, but intraday long-term is not, bar by bar, every day by day long-term. Also, the trigger points are specifically designed to take in one whole day's amount of information, and then it looks backwards in time, compiles that, and gives you the trigger point. So it's not really designed for the intraday.
Yeah, and while you can technically apply it to an intraday chart, we want to talk about how we're most comfortable using the methodology, and all the testing and all the work that's been done has been kind of geared towards that daily chart. Would you agree with that as a statement, Ryan?
Absolutely.
Okay, cool. There you go. How about using it to trade options? Do you have any experience with that? Paulette wants to know. Thanks for the question, Paulette.
You could absolutely use this to trade options. I personally don't. No one at Capaccio Trading does, but we do have people that are currently on the Metastock platform that use the Endeavor program, and I get emails all the time about how it works with their different option strategy. I mean, specifically the black signal, when you can predict how high something is going to go, and roughly you can look backwards in time and say, okay, the bar moves X amount. It should take X amount of days to move up there, and you know that projected target range. There's a couple different options, strategies that work pretty well with that.
Cool. So again, that link for you is metastock.com/simplicitytradinga. Looks like that's the lion's share of the questions, Ryan. Good job. Thanks for joining us today. For everybody that's in the audience, well, of course. Everybody that's in the audience, I want to say thanks for your time today. I hope you enjoyed it. I hope you learned something. And as always, we will see you at the next webinar.